Hi, everyone. Me again, Devin Coombs, CPA, MBA, ex-Google and Deloitte, and now San Jose State lecturer and consultant in the Bay Area. And today we're going to do something a little different. I've created a practice exam, which you can get in the comments, as well as used AI to create a video that goes over the practice exam. And then I'm going to jump in where there needs to be clarifications. And so the goal of this is if you are taking one of my classes, or if you really just are interested in business education and want to try a case study hands-on, you'll have access to the case study below. You'll have access to the AI tools I use below, like NotebookLLM. And then this explainer video will cover how you got to those answers. So I think this is a really cool way to use the new technology, and I'm trying to really innovate education here. So please play along. Let me know if you're like this, if you're interested in it. Just let me know in the comments and subscribe, and then I'll do more videos like this to really help be on the cutting edge of education. Thank you, everyone, and have a great day and enjoy the video.
Forget the textbooks for a second. Today, you're not just learning, you're doing. You are the business consultant. We've got a real-world company on the line, and our job is to pop the hood and figure out if it's actually successful. Let's get started. All right, meet our clients, City Coffee Roasters. They've handed us their financial data and a couple of key notes about how they run the place. So our mission is to analyze everything they've given us and deliver a clear verdict on their financial health. You ready to dive in? First things first, with any business, you have to follow the money. It's the golden rule. We need to get a clear picture of how much cash is coming in, how much is going out, and most importantly, what's left over at the end of the day. This is the profit picture. So the very first question we got to ask is, how much money is coming in the door? In business terms, that's called revenue. It's the total of every single sale before any bills get paid. And for a coffee shop, that's more than just the coffee. Okay, this part's pretty simple, right? We just take the money they made from coffee sales, that's $180,000, and we add the $20,000 they made from selling pastries, put them together, and we get a total revenue of $200,000. That's our starting point. Now, making 200 grand is a great top-line number, but it's not free. As they say, you have to spend money to make money. Those costs are called expenses. So let's figure out what it actually costs City Coffee Roasters to bring in that revenue. In this case, their main expense is something called cost of goods sold. It sounds fancy, but it's just the direct cost of the actual stuff they sell. The coffee beans, the milk, the sugar, the paper cups, all of it. And that adds up to $150,000. All right, this is the moment of truth, the question everyone really wants the answer to. We know what they made, and we know what they spent. So what's actually left in the pot? The difference is their net income, what people call the bottom line. And there we have it, $50,000. You take the $200,000 in revenue, you subtract the $150,000 in expenses, and what's left is a net income of $50 grand. This is our first major clue about the health of this business. Okay, so we've seen the flow of money over time. That was like watching a video. Now we're going to take a single photograph, a financial snapshot. We need to see exactly what the business owns versus what it owes at one specific moment. Let's start with the good stuff. Assets. An asset is basically anything of value that the company owns. This can be physical things like their fancy espresso machine, but it's also the cash in their bank account and the inventory they're waiting to sell. Let's add it all up. All right, let's tally this. City Coffee Roasters has $25,000 in cash. They've got $15,000 worth of inventory. That's beans, cups, you name it. And their equipment is worth $40,000. You add it all together and their total assets come out to $80,000. Okay, so we know what they own. Now we have to look at the other side of the coin. What do they owe? These are their liabilities, basically any debts or financial obligations they have to other people, like suppliers or the bank. So they owe $10,000 to their suppliers. That's called accounts payable. Plus, they have a $20,000 bank loan they're paying off. That brings their total liabilities to $30,000. So after all is said and done, what is this business actually worth to the person who owns it? To figure that out, we use what might be the most important formula in all of accounting, but it's super simple. Assets minus liabilities equals owner's equity. It's just what you own minus what you owe. And boom, there's our number. With $80,000 in assets and $30,000 in liabilities, the owner's equity is $50,000. This number represents the owner's true financial stake in the company. It's their piece of the pie. Now, the numbers tell a huge part of the story, but they don't tell you everything. To be a really good consultant, you have to be a detective. We need to dig into the notes on how they operate to spot any hidden risks or strategic moves. Okay, check this out. Here's a really key detail from the notes. The owner took 10 grand of their own money and put it back into the business to get a better espresso machine. When funding comes from the inside like this, it's a very specific thing. This is a textbook example of internal financing. See, instead of going to a bank for a loan, which would be external financing, the money came from within. This is a big deal because it shows the owner's personal commitment. They're literally invested in its success. Ooh, okay. Now this next note, this one sets off a few alarm bells for me. It says one single manager is in charge of ordering the beans, checking them in when they arrive, and paying the bills for them. Now that might sound efficient, but in the world of business, that's a huge red flag. What's missing here is a critical safety measure called segregation of duties. Think about it. You never want the person who orders the stuff to be the same person who pays for it. Without splitting up those jobs, it's just way too easy for mistakes or even fraud to slip through the cracks. This is a major operational risk we'd have to flag for the owner. Okay, the moment has arrived. We've analyzed the profits, we've assessed the financial snapshot, and we've uncovered some operational details. It's time to deliver our final verdict. The company had a very specific performance goal. Let's see if they actually hit it. So, their stated goal was a 30% profit margin. To see where they landed, we calculate their actual margin by dividing their income by their revenue. That's $50,000 divided by $200,000, which gives us 25%. So do they meet their goal? The answer is a clear and simple no. They fell short. You know, what we just did for City Coffee Roasters wasn't some unique magical process. We were applying universal rules that govern pretty much any business. So let's do a quick lightning round on some of those foundational ideas that give our analysis context. At its core, City Coffee is a business, right? It's in the market trying to find that sweet spot called equilibrium, where the number of people wanting lattes matches the supply. If latte prices suddenly shot up, you can bet more shops would pop up to sell them. Supply would increase. Luckily, they aren't in a command economy where the government sets prices. And since it's just one owner, it's probably a sole proprietorship. See? These are the building blocks. So just take a second and look at what you just did. You learned how to actually calculate if a company is profitable. You know how to assess its overall financial health. You can even spot critical operational risks like a lack of internal controls, and you get the big picture principles behind it all. That is your new consultant's toolkit. You honestly have the framework now to look at any company, from the corner store to a giant corporation, and start asking the right questions, to start seeing the story behind the numbers. The business world is just full of these puzzles waiting to be solved. So the only question I have left for you is, what will you investigate next?